Duolingo. You probably know the app. It's taught millions of us a new language, and it turned into a huge stock market success story. But lately, the whole conversation has changed, and it's all about one thing: artificial intelligence. So today, let's really get into it and figure out what Duolingo looks like as an investment right now. The big question that's hanging over Duolingo is this: is AI a massive opportunity, or is it an existential threat? Could new AI startups just come in and eat their lunch? Or can Duolingo use its AI to build an even bigger, stronger competitive advantage? This is the debate that is splitting investors right down the middle. And the stakes here are incredibly high. The stock has plummeted 48% from its peak. That is a huge drop, and it really shows you how worried the market is about this whole AI risk. So the question for us is this a warning sign? Or is it maybe a massive buying opportunity for people who believe in the company's long-term plan? To figure that out, here's what we're going to do. We're going to break down the bull case, all the good stuff. Then the bear case, the scary stuff. We'll look at exactly what management's game plan is for AI, and then we'll wrap it all up with the investment outlook. So let's get into it. All right, first up, let's talk about the bull case. Before we even get to the AI conversation, you have to understand that Duolingo's core business is an absolute powerhouse. Just look at this. This chart is basically the bull argument in a nutshell. We're talking explosive growth. Daily active users are up 40%. Paid subscribers up 37%, and revenue up 41%. Now, what makes these numbers just jaw-dropping is that they're on top of a year where user growth was already 60%. This isn't just good growth. This is like accelerating momentum. It's wild. And listen to this. It's not just about learning languages anymore. Duolingo is proving it can take its playbook into totally new areas. Their new chess course, which, by the way, didn't even exist a year ago, has already blasted past 1 million daily active users. That is a brilliant sign that they can use their platform and their whole gamified learning thing for pretty much any subject. So how are they doing this? Well, one really smart move was changing up the experience for free users. They're moving away from the old heart system, which was kind of like a stick, right? You make a mistake, you lose a heart. Now they're using a new energy system. And energy is the carrot. It rewards you for getting answers right in a row. And the results from this one little change? They've been absolutely stunning. The company says this new energy system has boosted daily active users, increased the amount of time people spend learning, and it's gotten more free users to become paid subscribers. The CEO, Louis von Ahn, even said on their earnings call that it's super rare to see a single feature move all three of those core metrics at once. That's a home run. Okay, but if the business is so strong, why the 48% drop in the stock? That's a fair question. So now let's flip to the bear case. This is where the AI threat and a few other challenges really come into focus. And this isn't just speculation. This is straight from their own official filings. Duolingo admits the risks. And what's number one? A super competitive industry with new products and companies popping up all the time. And they specifically call out the potential for disruption from generative AI. Other big risks? Failing to keep users hooked, and of course, being so dependent on Apple and Google's app stores. Now, Duolingo's answer to the AI threat is its own fancy product, Duolingo Max. It's a more expensive subscription that uses generative AI for cool stuff, mainly AI-powered conversation practice. But here's the twist. In trying to build its own AI lifeboat, Duolingo might have sprung its own leak. And the whole issue is summed up perfectly in this quote from the CEO. He flat out admits that the main feature of their big, premium AI product is, well, it's too hard for beginners. And beginners are a massive part of their user base. Think about it. Trying to have a whole conversation in a new language when you only know like 20 words? Yeah, that's a tough sell. And you can see that problem right here in the numbers. Sure, Max subscribers are now 8% of the total, but the growth is way slower than the company was hoping for. Management's phrase was that Max is performing a little less than we expected, which is corporate speak for this isn't really hitting the mark with the mass market yet. And there's another headwind here. User growth has slowed down in the super important US market. The reason? Well, after some controversy, they stopped posting that edgy, viral social media content that was a huge magnet for new users. So yeah, they managed to make their brand sentiment more positive, but it cost them that viral growth. So what do we have? We've got a really powerful core business, but some very real headwinds from AI competition and slowing growth. And that brings us to maybe the most important part of this whole story: management's playbook for how they're going to tackle these challenges head on. Management's whole philosophy on AI is crystal clear from this quote. It's not about cutting costs or replacing human teachers. For them, the goal is to use AI to make the product better, to actually teach more effectively. This is a product-first approach, not a cost-cutting approach, and that's a really important distinction. So, how are they going to teach better and fix Macs? Well, they've got a three-part plan. First, they're going to make those video calls bilingual so beginners can ease into it. Second, they're going to make them more fun with features like different backgrounds. And third, and this is really interesting, they're changing how they measure success. They're now obsessed with a new metric, the average number of words spoken per user. The logic is simple, right? If people are talking more, the product must be working. And what about that growth slowdown in the US? The plan there is pretty straightforward. Now that they've gotten the positive vibes back on their social media channels, they're getting ready to slowly bring back that edgy type of content that is much more likely to go viral and get user growth cooking again. Okay, so let's put it all together. The good, the bad, the plan. What does this all mean for the investment? Let's look at the numbers and try to come to a final verdict. Looking forward, this is what management itself is forecasting. They expect to cross $1 billion in revenue for the very first time. But even more important, look at the adjusted EBITDA. That's a measure of profitability. They're guiding to over $300 million. That's a profit margin of almost 29%, which for a high-growth tech company is just incredible. This forecast tells you they believe the core business is going to keep firing on all cylinders, even with these challenges. So at the end of the day, it all boils down to this. The investment decision here is a balancing act. On one side of the scale, you have incredibly strong fundamentals and a team that has proven they can execute. On the other side, you have a pretty high valuation, even after the stock dropped, and that very real but still kind of unknown long-term risk of being disrupted by AI. Which leaves us with the ultimate question you have to ask yourself as an investor. Has Duolingo's brand, its massive pile of data, and its fun, gamified platform created a truly durable competitive advantage, a moat, but can survive the AI revolution? Or is it just a company that got a head start in a race that's about to be completely rewritten by new technology? That really is the billion-dollar question.